Hi there, it's 𝗵𝗶𝘀𝘁 from 𝗵𝗵 Related Center, and today I want to talk to you about 2021 was a great market, and a lot of mistakes that people are going to make in 2026 is treating 2026 as though they were 2021. From 2022 and 2025, a lot of people lost money in the real estate markets, and these are the realities of what happened, why people lost money, and what you should be doing in 2026. Point number one is fear of missing out. People were frankly just bidding on a lot of properties beyond what the properties were worth, sometimes 20%, even more than what the property was. So when the markets corrected itself, of course, a lot of people were dead in the water. Number two was pre-construction. A lot of people invested in the pre-construction, and oh my goodness, don't even get me started, because so many people got money in, I'm talking about $500,000 to $1 million. They reinvested everything back into the property and they lost it all. Why would you do that? Okay, it was because a lot of people were making money and they thought, okay, this is gonna go on forever. I want you to understand that real estate are cycles and cycles end. Okay, so you have to understand. So instead of putting the money and securing some of it by taking the money out of the markets, right, or by fixing their mortgage or whatever to secure the money, they put everything back into it. So I think that's the lesson here, is that make sure that you secure some part of your wealth as security, maybe like 50 to 60% depending on your age group, and then maybe 20% is going to be exposed to risk, just something like people do in the stock markets, right? Number three, the biggest thing was that interest rate was going high. That was the biggest thing for a lot of people. And I will include this video where I talk about, hey guys, it's time for you to sell your properties because the Bank of Canada has said they are going to be increasing interest rates. So I called it out. I said, people start selling your properties, but people thought, okay, because I already made money, again, greed. Because people are thinking, oh, I made money in 2021, 2022, it's going to continue. They didn't sell. A lot of people didn't listen. The clients are listening to me. They're thankful right now.
Hey guys, you know I'm always giving you the news about real estate, when to buy, when to sell, what to do. Right now, it's time to start selling out your investment properties. Due to the capital gain taxes that the government is proposing to have, if they do pass that into law, you guys are going to be paying significantly more, especially if you start to flip properties. If you buy and sell properties within a year, you're flipping it.
But people that didn't listen got bonds, again, because of interest rates. And that was the biggest thing. So investors miscalculated their cash flow. So because of interest rates was lower, people were making cash flow. They didn't fix the mortgage. Of course, because of variable rates, they lost the cash flow, and some of them were negative. And then they started carrying these properties. And think about just people carrying like $10,000 negative cash flow on their property, each property. So we're talking about, let's say you have 4 properties, that's $40,000 a year. Carrying it from 2022 to 2025. By the time you're selling this property now, it's maybe $100,000 lower than what you originally paid for it or what it was worth in 2022. So people were losing money. Again, this is what happened. What we can gain from all this real estate is a highly leveraged item. Things that we can learn from: cheap debt is not permanent. Real estate is a leveraged asset, so which means that risk of rates really matters. For pre-construction, appreciation is in cycles, right? So buying above intrinsic value sometimes compresses our future returns. For investors, if the deal doesn't cash flow, it's a speculation. Maybe you want to consider that you shouldn't invest in those kind of assets. For pre-construction, real estate is a liquidity issue. Hi there, my name is... People that are investing in pre-construction in 2026, I want you to know that pre-construction is not a long-term strategy. If you don't have a long-term horizon, you shouldn't be investing in it because liquidity is at risk. I know a couple that invested everything that they have and they lost. I'm talking about people that were supposed to be retiring. They lost everything, went back to work. Imagine going back to doing $20 job. You having $500,000 in your account, and now you have to go $20 job because you lost everything to real estate. This is what I'm talking about, right? I'm talking about people also that invested everything back. Instead of securing their assets, they invested everything back and they lost it all. This is in different pre-constructions. Builder on their tail. Their primary residence is also in a big mess, and now problems in ending in divorce, sometimes going back home, kids tuition now at risk, right? These are the things that really happened in 2025. These are really what happened in 2021, I was gonna say. So what are we gonna do in 2026? Number one is make sure that your fundamentals are very, very strong. Make sure that you run your numbers, the numbers are making sense, cash flow or break even at the very least, and make sure that you're having a contingency fund, at least 6 to 12 months supply in your account, ready to be able to weather the storm, so that you don't have to rush to sell an asset and lose all your hard-earned money. Number 3 is think long term. Don't think months like we used to do flips. That was the market for it. I told you one day I'm gonna make a video about the cycles in real estate, but make sure that you're thinking in years, not in months. So you have to have at least 5 to 10 years horizons for you to be able to invest in real estate. Now let's talk about what you should be doing in 2026. The key takeaways that I want you guys to learn here is that you have to stress test beyond your qualification rates. Make sure it's something that you can afford. Number 2 is buy based on your income. Guys, I've seen a lot of people that want to flip reconstruction, like I said, or flip properties. They thought they would be qualified, they have no income, they are borrowing from private lenders, and this got them bonds as well. So make sure this is something that you can afford. Make sure the interest rates are making sense. Run your numbers, reach out for consultations. This $500 consultation can save you thousands and if not hundreds in your portfolio. Also, make sure that you have emergency reserve. I talk about that. 6 to 12 months to be ideal. Your primary residence is not a short-term trade. This is where you're going to live. You still need to live in a house, right? So make sure that you have a long-term horizon, and liquidity matters than your ego purchases. Don't just go and buy properties because my friends are buying properties or anything like that. The advantage of investing in the primary residence is that you have false equity to build. It's a way of making money without necessarily paying tax as well. It's shelter your stability. So it's more of, if you're buying in 2026 because of primary residence, this is where you're living. A lot of my clients that are doing that, you're buying it because it's an emotional stability for your family, right? You're not buying it just because you want to invest. You're gonna live somewhere. You have your money, all your things are aligned. You have income, you have good credits, and you have your down payments already saved up. You can put it into real estate and give yourself time to be able to invest, because the advantage is the compounding rate growth, right? You don't have to, your landlord doesn't have to continue to increase your rent. A mortgage paid down, you're paying down your mortgage. So even if this property doesn't appreciate again, you are having money, your mortgage, which means that is money back in your pockets. And then asset appreciation over decades. When you're retiring, you choose to go back home, you choose to go different places for vacations, you have money already waiting for you. So the mistake you're gonna make in 2026 is considering that the market is 2021 and it's forever gonna be like that. This is a thinking time, and a thinking time creates wealth appreciation. It creates generational wealth, and we want to make sure that we are dotting our I's, crossing our T's to be able to buy properties in 2026. So for more information on how to do it correctly without breaking your back, without all the negative consequences that is going on, this is the time where buyers are going to win. This is the time where patients are going to pay off. So I'm telling you, if you want to make sure that you're doing all your due diligences, make sure that you reach out. I'll be more than happy to work with you to make sure that you reach your goals. All right, till next time, drop all your questions. If you have any comments, or if you have any questions, or if you don't agree with anything that I said, please drop it in the comments below and tell me where you are joining me from, and also tell me what questions do you have, what other videos do you want me to make in future, and I'll be more than happy to do that. Thank you.